Good evening, everyone. This video is going to be a trading review and support session for October 26, 2022. It's Wednesday evening and we're live here. So let's go ahead and go through the trading for today. Let's first go off of kind of like where we're at in the daily activity. And this is today. Right, so you can see we're coming off of three pretty good up days. Today was an up day as well, and it actually turns out that it was kind of a creepy up day for some time, and we actually ended up going over the 50-day moving average. As you can see, it was within reach yesterday. We actually made it over today, and in the aftermarkets, even though it's up again, even though I believe Facebook posted some not impressive earnings or something. I haven't read it yet, but I just saw some negative kind of comments. So 50-day moving average is at 38.67, and we're at 38.59 right now. So we'll pull back a little bit underneath the 50-day moving average. So market's been kind of going up. Here's that big outside day. Maybe they're hoping that was the bottom. We'll see. And it's looking okay so far. Maybe at least bottom for a little while. So going through the trades today, just kind of go through, trying to lay off the early kind of sessions, kind of like make it do something first, and then it did. And so I took the first trade here. It's pretty big bar, right? Eclipsing all the sideways kind of action. So that was a 1.5 point trade there. And then I got kind of aggressive here. At least I said it was aggressive. So I got in, and the problem with this is it was kind of going into yesterday's close. I was trying to get a little bit after yesterday's close, and it kind of hit the target and then rolled back. And I was hoping it would come back to it, but it didn't. So I did, since it was kind of an aggressive entry, right, and it's prone to pull back, right. And so I went ahead and kind of stuck with the trade, managed to move the stop and try to add to it. And I did add, ended up having 3 contracts. This one was also aggressive, right, because it was kind of, again, going into the 25% upper line. This one was better. I mean, it's coming back down after a hit to the double hit to the pivot point. There's 1, and there's 2 hits to the pivot point, and rolling back up. So this one was a little bit better, but it ended up getting out of everything prior to the 25% upper line for 2 points. So 1.5 there, 2 there, so it's up 3.5. Even though I had to play with this trade a little bit. Took this trade for 1 point, right? And again, this time it was out before yesterday's close. It pulled back to the EMA again, and could have been maybe a little bit faster on this. This is also an aggressive entry, right? So again, these type of things, just a little bit over a major level, like yesterday's close, is problematic. But I stuck with it, and again, kind of didn't have to add to it, did not add to it. I just took it for 1 point over here, right, and got that trade out, and then the market came back down. So couple of aggressive entries. If you avoid the aggressive entries, then you won't have to do what I did, but it worked out. Rolling over again prior to the coffee break time, had a entry here. Oh, here it is, up in here, right? An entry here, coming back out of the fast zone, right? And in VWAP, when it broke back out of the fast zone, took a quick 1 point entry there, came all the way back down to to the close. I mean the open. Similar trade to what I took a little bit later as well. So then that's like, I think that was the 4.5 point. No, let's see, 1.5, 3.5, 4.5, 5.5, 6.5. So I'm up 6.5 already. And so let's see, kind of watching it here. Similar trade here, right? Again, back down to the instead of coming back down here, breaking out again there. So that this was a quick trade for 1 point there. So that would be like 7.5 points on at the edge of the push time frame. So since I did take that in the push time frame, this was another push. I thought it was going to do this, right? Because we had news at 7. So I thought it was going to do this, but I'd already taken a trade, and so I didn't want to get caught in there. And then it went crazy. I mean, literally crazy. So, pop 20 points in just a few seconds. And so I'm waiting it to settle down. I did take a quick 1 point trade here, right? Because this was already crazy, right? So I was waiting on it, and it's running away from the EMA. So I took a quick 1 point here, right? That was fast. And then this one I chickened out on. I come back over here. So it's doing pretty good. So this trade I chickened out on, again, a little bit over the previous Globex high, and got out, but then it pushed up again pretty quickly, and I took another trade. So this one was 2 ticks, popped up again, and I took this one for 1 point. Altogether, that made 10 points for the morning. No losing trades. No losing final positions, I should say. The one trade that I took that I had 3 units on, the initial entry was a loss, but then overall it was a winning trade by the time it was flat. So 10 points relatively quickly, and so again the addition of the slow flex I like. I'm working on one more addition just to kind of see breakups and breakdowns. And it's kind of interesting. I just created it a few days ago. If I continue to like it, I'll share it. It's not super sophisticated or complicated at all, but I think it is helping me to see the big picture a little bit on when the moves have kind of ended and when it could be starting to go the other way. I'll share more about it later. We've had something similar in the past. This is just slightly more responsive, and so we'll see if we kind of like that or not. I'll continue to watch it for the rest of the week. It's not difficult to see, but we'll chat about it in the room. Probably starting next week or so. I'll put it on the screen so you guys can take a look at it. And I just have it in the code, on the experimental code that I'm watching. And if I start to move it towards production, I'll give you the option of showing it or not. Again, if you don't like something, I like to give you the ability to not see it, if that's what you'd like to do. So I think it's helping a little bit. All right. So anyway, that's it for that. Any questions? I mean, I'm stopping. I mean, I went all the way to 10 points today. I mean, really, if I get 5 or 6, I mean, that's plenty. But it was giving me some trading options, so I went ahead and ran it all the way up to 10 points. And actually, there was a couple of few trades after that could have been okay. I just calling it quits at a reasonable profit targets. Everybody can stop at their own profit targets. But anyway, 10 is a good day. Alrighty, any questions on that? Let's see. Question: how come I was making easy money long before, at a time of Bullseye Software is in a different market or anything else like larger profit and loss? Okay, I'm not quite sure I understand. Oh, during you saying during the time of that software, right? You're saying that the money was a little bit easier to make. Um, I mean, time definitely. I mean, market definitely changes, right? And we're in a little bit more volatile market now, right? Because the volume has been higher, right? The global economic conditions have been pretty volatile. We're in the middle of the Fed's raising interest rates, right? And that causes a lot of dynamics in the market. So maybe that's what you're seeing. I mean, I know for a fact that these volatilities um, are it is a little bit more prone to the 3 point stop out, if that's what you meant. But in that older kind of counter trend kind of scenario, that was actually in my particular opinion and other people's opinion, in that old software, meaning I'll go ahead and say the name, in the Bullseye software, it wasn't very profitable. Longer term, it wasn't very profitable. And picking the market movements has been better, right? Even though the risk to reward ratio, the winning percentage the winning percentage is much higher today, right, than it was with that particular trading uh, well, I mean, markets sometimes trend, markets sometimes go sideways. I mean, so that's always going to be the case. And then when you get into the scenario of when there is a lot of volatility and then less volatility, that's when it sometimes is it's more prone to movements and hitting stops. I'm not sure I've answered your question at all. It's just that not many people were enjoying that type of a market. Yeah, I mean today, yeah, we're not just throwing my contracts out there in a random or in a fixed point. I mean, if you're trading that old software today, you'd probably be in really big trouble, right? If you're trading Bullseye, well, independent of the software, if you're trading that technique today, you'd be in really big trouble. I think. I mean, I haven't looked at it in literally years. It's not even on this computer. I still have it somewhere on an old computer somewhere, but I literally haven't looked at it in years. Did I answer your question at all? I'm not sure I ever really got the gist of your question. Okay. All right. Hopefully I got close to it. I mean, with the things we've got on the screen, I know it's a little busy, but if you take a look at it, right, the market is reacting, and as long as we react to what the software is saying, then it puts the edge in our favor some, as long as we don't get too aggressive. and that's still one of my issues. Sometimes I get a little bit too aggressive. All right, anything else? Um, I don't want to arbitrarily say we should have a bigger stop. For instance, today, let's go back to, for instance, when I'm at least in the right direction of the market. Let's talk about these two trades. All right, so this was an aggressive entry, right? And even this one was an aggressive entry. So sometimes I'm just going to, make those, the finger is going to take over, etc. I mean, I knew this was an aggressive entry. I said it's going to be kind of aggressive up in here. And so it could pop through. It could ramble through here and pop through a little bit, or it could pull back. I made the decision to not necessarily just go with a bigger stop here, but to actually ride this trade out some, right? So if I had, let's see, my entry, I can't, let's see, my entry was at 49. Let me see. Let me look at my trading chart, see what the actual trade entry was. 49.50. So my entry was actually 49.50, right? So it's really right about. I'll put the arrow right on my entry point, right? So that's a pretty aggressive entry right there. So I knew that. So am I going to? So the normal stop would have been 6.5. Would have been at that. Let me put it over here so you can see it. 6.5 would have been the stop. All right. So realizing I had kind of made an aggressive entry, but the market had made a big move. So should I put an arbitrary stop in? So even at, so that's 3. If I had put in a 4-point stop, right? So there's 5.5. A 5-point stop would be 4.5, right? So it actually exceeded 4.5. 5-point stop would have gone a little bit, but instead of putting in an arbitrary stop, and I say arbitrary, I chose to watch the market and see what it was doing, right? If it had crashed, yeah, I in fact I probably just moved it out of the way and or deleted it. I'm not sure which one I did. Right? So the stop was let's just go ahead and say that the stop was maybe down in here. If I even had a stop, I may have just deleted it. But I'm recognizing I had an aggressive entry, right? The market had made a big move up, and in reality it probably wants to come back up and test this. As it turns out, it did come back up and test this way over here, right? But I'm looking for to be able to get out of the market at something less than a new high, right? So I entered in here, right? And then when I entered here, then I think I needed it to be, my exit would have been somewhere around here. I entered in a third, and then let's see, let me take a look. I was exiting right around the 25% lower line. I had them spread out. One looks like I got out a 2 at the same level, and then the third, a little bit above here, right? And so I made 2 points, but I had to, it wasn't like it was grinding all day long. If it had broken down, for instance, if it had turned out looking like something like this, right? And of course it wasn't. I mean, it was still going up. EMA and it's in good shape, all that kind of stuff. I would have traded it a little bit on the old school style, and I would just closed it. In all likelihood, I would have reversed, right? But I did that based on an aggressive entry, right, being on the correct side of the market. If I had ever turned around and I was on the wrong side of the market, right, and the market's still going up here, right? The EMA is moving up, right? Even the VWAP is moving up, you know, and it hadn't come back down to the close yet, right? So, but if it did, then that would be a sign. It didn't ever give me a sign before I got out that it wanted to come back to here. Now, in here, right, it's starting to act like it's going to roll over, right? It made a let me clean this up a little bit. All right, so here it made a high, right? Then it broke down, right? And it made a lower high. Here it made a lower high as well, but this is what I was counting on to get out, right? I wanted to get out even though it was a lower high, right? And then it came down and broke down here again, right? So that's, I'm not even too sure what this looked like over here. But at that point, right over here, I'm underneath the slow, I'm underneath the fast, and I'm underneath ultra, and I'm underneath the EMA. So things are looking bad over here, right? Whereas over here, when I was adding to it, yes, I was under ultra because ultra is really fast, but I was still in the direction of the slow flex, even in the direction of the fast flex, and in the direction of the EMA, and I had support. So it looks very different, right? It looks very different. So that's why I was willing to stay with it for a while. So here's not looking too good. Let's go back and see. See, it's looking kind of bad, and it came all the way down to the volume point of control of the open. So at this point, right? So at this point, overall from the open, it did the up, and now it did the down. Right, so if something had gone wrong in here, right, then I would have been trading it and hoping to get out as soon as I could, right, but certainly hopefully no later than it completing the up down. That's not really a strategy that I'm using. I mean, that's just what we see, you know, almost every day in the market. And the only reason I'm doing this is again, because I kind of had made that aggressive entry, right? This was an aggressive entry. If I had waited, and I got 2 points out of it, but I actually increased my risk profile some, right? If I had waited to a more reasonable pullback, EMA, you know, and EMA coming up, so you even got 2 trades in that direction here. This one was probably still a little bit aggressive. It could be. I mean, for instance, you're talking about, you know, the comment was sometimes there's a big bar against the trend, and who were those people? Like for instance here, right? It hit yesterday's close, right? And here's a big bar, right? Didn't really change the overall trend, right? But it's a good question. Like, who's that? Well, it's probably somebody that got long early, right? It could have been these people. Okay, I'm going to write it, and I'm writing it, and now it has paused up here at yesterday's close, right? So it's more likely that these are people exiting along than it is people really wanting to go short. Does that make sense? Right, and you know that those are the type of things. Here it is again, right? So here's, you know, there's people over here that are long, people over here that are long, but the market took a rest, right? Now here could be a combination of the two, right? See there we've got another big down bar in expansion, right? This could be a combination of the two. It could be still people that are either long from here or got long in this expansion, right? And it has exceeded yesterday's close, made a little bit higher high, but as you know, it's a little bit later on in the morning, right? And there's 7 o'clock news coming out, so say, okay, well, it could be a combination, and this bar is bigger than that one, right? And just as not more importantly, look where we're at, right? This is a confluence of the linear regressions, right? So at this point, we are underneath all the flexes. We're underneath all the linear regressions. So this is a little bit more of a technical sell point, right? Even though it's still a little bit against the trend overall, but it's kind of heading into this, right? So anytime you get underneath all three, it's a pretty good chance that you're on side of the market, you're on the wrong side of the market. In this case, let me clean this chart up again. These are good questions, right? It has pushed down to the fast zone and the pivot point. It came back up, right? But it came back up to yesterday's close. So here's the high, right? Here's the low. Now I'm just going to arbitrarily see if I can, and it did exceed the 50% pullback area, right? So I'm going to call that about the 50% pullback area. It actually right around the EMA. So it actually technically got a little bit more enthusiastic on the pullback than maybe it should have, right? But it did come back to test yesterday's close again, and then got rejected again, right? And that's the move that really kind of definitely broke the trend, right? So this is a warning sign. After it came back under the EMA here, right, and then failed to make a new high, so that's coming down. It's coming down. I didn't get another trade until here because there's a lot of stuff. I mean, there's a lot of stuff in there, and I don't necessarily like to trade, for instance, when it's going through fast zones and pivot points and that kind of stuff. I mean, obviously some people are doing it because it takes volume pushing down, right, to get through all that stuff. If I needed the trade, right, I would have said this one in that area, going short in that area, really right around here, after it had pulled up, touched yesterday's close again, failed to make a high, coming back down under the EMA, you're essentially at everything, and it's a fairly big bar, right? It's a fairly big bar, right? And that one drove it all down. All right, those are good questions. Hopefully I did a reasonable job of answering them. Okay, good. Keep the good questions. I mean, there's no such thing as knowing everything. I mean, I would never pretend to know everything myself, but looking at these things for so long, we can kind of interpret the behavior. All right, anything else? Okay. You too. Hope you're feeling well and soon, and get to play with the grandkids some more. All right. Have a good evening, and we will see you soon. Talk to you soon. Thanks. Bye.